Hi, and welcome to the Stockscores Market Minutes for August 9th, 2013. This week, I want to talk about scaling into positions. Now, what I mean by scaling is adding to your position as the trade is becoming profitable. As the stock is moving higher in price on a stock that you've bought, it is a good idea to add more shares, provided you get new entry signals that allow you to increase your stop loss point. As long as your stop loss point, your new stop loss, is higher than your previous entry, you can protect the profit on your initial trades while adding to your position so that your upside potential is greater without increasing the risk. Doing this locks in the profit of the first position to mitigate the risk while providing more upside potential on a strong trending stock. Particularly when I am short-term trading, I like to scale into my position to add to those trades that are working. I never scale into a trade where it is not working. In other words, never add to a loser, never average down. It just doesn't work all that well. All right, let's get into this week's analysis. Here's a chart of the S&P 500, and this week we had the worst performance in the indexes since June. With that said, when you look at the chart, you see that really it wasn't all that bad. We are at the top of a channel. The tops are rising more slowly than the bottoms have been rising, and that's a sign that the buyers are getting a little tired. It is August. We are looking towards the potential for tapering in September by the U.S. Federal Reserve, and so I think it's reasonable to see a bit of a stall, maybe even a pullback here. However, the bullish market remains intact, and so we shouldn't shun stocks, simply take a little bit of caution in the short term. The TSX fell back from its resistance over the last couple of weeks and started to stabilize toward the end of this week, but really this remains a neutral market, one that is in a sideways trend where there are some oscillations up or down, and maybe a short-term trader can move in and out of these stocks, but for the most part, there's not a tremendous amount of opportunity in Canada yet. There are some signs of strength returning to the commodity stocks. It's very, very early, but traders may want to keep an eye on that story as it evolves. Treasury bonds in the U.S. Are still in a bearish trend, but the bottoms are not falling as quickly as the tops. You can see that I've drawn the tops in red and a line across the bottoms in green, and we're forming what's called a falling wedge pattern, which is basically the tops falling quicker than the bottoms. If we get a break of that red line, we could see a quick snapback in prices of U.S. Treasuries, which would mean that interest rates would come down. We're not really seeing a strong market in Treasuries, but there is that potential, and so watch for that break through 108 on the TLT. Emerging markets did okay at the end of this week. They're trying to make a comeback. There's a lot of talk that it's time to get back into emerging markets, time to get back into Europe. I think those calls are pretty early in the trend because we don't see great strength yet, but we are seeing an improvement, and so we shouldn't ignore this market, just remain somewhat cautious with it. The US dollar has been in a downward trend, and that's probably helping commodity prices, but it is nearing support where it should bounce. I've drawn the line of support in green, and so expect in the short term that the US dollar will bounce, and that may take some wind out of the sails in the commodity comeback that we saw late this week. Gold is threatening to break its downward trend line, and it has built a rising bottom, and that could be the story to watch next week. If gold is able to break that downward trend line, I expect you'll see some good opportunities as a short-term trader trading the bounce in the gold mining stocks. Keep in mind, however, that this is a short-term trade only because the overwhelming sentiment in gold is still pessimistic. We could get a little bit of a snapback rally, a little bit of a bounce from oversold conditions, but to take a long-term bullish view on gold, well, that's just too early to call at this point. And oil is in a sort of take a break mode. It's had a pretty good rally over the last 6 weeks, and it's now building a sideways consolidation inside that pennant pattern. I expect it to stay in that pattern for a week or two, but overall the picture for oil is pretty good. I think until we break out of the pennant pattern, though, I wouldn't get too excited about a continuation of strength in the oil market. So I remain bullish on U.S. stocks, but again, short term, I expect some profit taking there. Canadian stocks, neutral. There are select opportunities here and there for short-term traders, but generally, I want you to be pretty careful with Canadian stocks still. Neutral on gold, and I say neutral simply because it's in that downward trend but threatening to break the downward trend, and that could provide a trading opportunity. Bullish on oil, but as I said, I think that we're in a little bit of a take a break mode after the strong run-up. Well, that has been the Stockscores Market Minutes for August 9th, 2013. Have a great week in the market and trade well.